Ever wonder how the world's wealthiest families keep their fortunes for generations? The secret isn't just making money, it's preserving it. They build financial fortresses, weathering recessions and inflation, focusing on lasting strategies over flashy spending. This video reveals the 6 pillars of enduring wealth: real assets, smart investments, and the knowledge to make your money work for you. Ready to unlock the blueprint? Let's begin. Real estate is the oldest and most tangible form of wealth. For the wealthy, it's more than a home. It's the foundation of their financial strategy, offering security and steady growth. Land is finite, and as demand rises, so does value. Real estate generates reliable income and can be leveraged to build even greater wealth. This is why real estate remains the cornerstone of lasting wealth. Real estate offers powerful financial advantages, especially for those in high tax brackets. Governments provide tax incentives to encourage investment. Depreciation allows owners to deduct a portion of the building's cost, reducing taxable income. This can eliminate income tax on rental profits. The 1031 exchange defers capital gains taxes by reinvesting in new properties. This allows for indefinite portfolio growth without tax erosion. Real estate also hedges against inflation. It preserves the real dollar value of assets and income. A well-managed portfolio protects against inflation's erosion. Real estate is a powerful tool for legacy planning. Properties can be placed into trusts for smooth intergenerational transfer. Real estate becomes a family legacy and a foundation for the future. Understanding these layers transforms real estate into a perpetual wealth-generating machine. Stocks and equities are the engine that drives wealth. The wealthy invest in shares of leading companies, owning a piece of their innovation, growth, and profits. Diversification is key. They spread investments across sectors and regions, managing risk and capturing growth. With patience and discipline, they hold for the long term, letting compounding work its magic. This is how fortunes are multiplied through equities. Beyond the potential for capital appreciation, a well-constructed stock portfolio provides another vital stream of income: dividends. Many stable, mature companies regularly distribute a portion of their profits back to their shareholders in the form of dividends. For the wealthy, this represents a truly passive income stream. It's money that flows into their accounts every quarter simply for being an owner of the business, requiring no active work on their part. This cash flow can be substantial, providing liquidity for living expenses or, more strategically, being reinvested to purchase even more shares, creating a powerful compounding effect. This process of reinvesting dividends is a cornerstone of long-term wealth accumulation. When a dividend is used to buy more stock, those new shares will then generate their own dividends in the future. This creates a virtuous cycle, a snowball effect where the portfolio begins to grow at an accelerating rate. It's a patient but incredibly powerful strategy that can turn a modest investment into a massive fortune over several decades. The wealthy often construct entire portfolios focused specifically on high-quality, dividend-paying companies, creating a reliable income machine that functions independently of their direct labor or involvement in the business world. Furthermore, in many jurisdictions, income from qualified dividends is taxed at a lower rate than ordinary income from a job. This preferential tax treatment is a significant advantage that allows the wealthy to keep a larger portion of their investment income, further enhancing their net returns and accelerating the compounding process. They work closely with financial advisors and tax professionals to structure their portfolios in a way that maximizes these tax efficiencies, ensuring that every dollar of growth is working as hard as it possibly can. This strategic approach to tax management is just as important as the initial investment selection itself. Ultimately, stocks and equities represent ownership in the global engine of economic progress. The wealthy use them not as a lottery ticket, but as a systematic tool for long-term growth and income generation. Through disciplined diversification, a patient long-term horizon, the strategic reinvestment of dividends, and savvy tax management, they harness the power of the world's greatest companies to build and preserve their fortunes. It's a strategy that requires patience and discipline, but the rewards, a share in the ever-expanding pie of global prosperity, are unmatched in their potential for wealth creation. Beyond public stocks lies a more exclusive realm, private equity. This isn't about buying Apple or Microsoft shares with a click. Private equity means investing directly in companies not listed on public exchanges. The wealthy are drawn to its potential for explosive returns and direct involvement. But access is limited, reserved for accredited investors with significant capital. This high barrier keeps private equity an exclusive club, where wealth begets more wealth. Private equity investing is a high-stakes, long-term game. Unlike public stocks, your capital is locked up for years, giving firms time to drive deep, transformative growth. Strategies range from leveraged buyouts of mature companies to high-risk venture capital in startups. Private equity professionals don't just invest, they actively build companies, guiding them to success. The ultimate goal? A successful exit, where years of patient capital and expertise pay off, often multiplying investors' wealth and cementing private equity's role in wealth growth. While most think of assets as stocks or bonds, the ultra-wealthy often treasure tangible items, fine art, rare cars, vintage wines, and collectibles. These assets are valued for their rarity, history, and beauty, often appreciating independently of financial markets. A Picasso or a rare Ferrari isn't tied to stock market swings. For the wealthy, these treasures offer both diversification and the joy of owning something truly unique. Unlike stocks with clear prices, valuing fine art and collectibles is subjective and requires expertise. Wealthy collectors rely on advisors, research provenance, and use a vast ecosystem of experts. Lending art to museums can boost prestige, offer tax benefits, and shift security costs. Collectibles like rare diamonds or watches are portable, globally recognized, and resilient in crises. Art plays a key role in estate planning, turning wealth into a lasting legacy of culture and influence. Generational wealth isn't just about making money, it's about building a fortress to protect it for centuries. Trust funds and estate planning are the keys, creating a secure vault for assets. This legal structure shields wealth from taxes, creditors, and even family disputes. The wealthiest families play a long game, ensuring their legacy and values endure for generations. Estate planning isn't just about preserving wealth, it's about minimizing taxes and ensuring your legacy endures. The wealthy use trusts and strategic gifting to move assets out of their taxable estate, passing more to the next generation and less to the government. Charitable trusts and annual gifting further reduce taxes, supporting causes and family alike. This forward-thinking approach turns fleeting riches into lasting legacies. Gold and precious metals are the ultimate safe haven. For millennia, gold has been a universal symbol of wealth and stability, enduring when currencies collapse and markets panic. The ultra-wealthy use gold not for growth, but as financial insurance, a hedge against the unknown. Its scarcity and intrinsic value make it a stabilizing force in any portfolio. In times of crisis, gold is the asset of last resort, timeless, tangible, and trusted. While holding physical bullion like bars and coins is the most direct way to own precious metals, the wealthy employ a range of more sophisticated strategies to gain exposure to this asset class. One popular method is investing in gold-backed exchange-traded funds, or ETFs. These funds trade on stock exchanges just like regular stocks, but their value is directly tied to the price of gold because the fund itself holds large quantities of physical bullion in secure vaults. This offers the benefits of gold ownership, liquidity, and price exposure, without the logistical challenges of storing and insuring physical metal, making it a convenient option for many modern investors. Another strategic avenue is investing in the shares of gold mining companies. This is a more leveraged play on the price of gold. When gold prices rise, the profitability of a well-run mining company can increase exponentially, leading to a much larger percentage gain in its stock price compared to the price of gold itself. Of course, this comes with additional risks, such as operational challenges, geopolitical issues in mining locations, and company management performance. The wealthy who choose this route conduct extensive due diligence, selecting established companies with proven reserves and efficient operations. turning a commodity investment into a strategic equity position with higher potential returns. Beyond just gold, a diversified precious metals portfolio often includes silver, platinum, and palladium. Each of these metals has its own unique supply and demand dynamics. Silver, for instance, is not only a monetary metal but also has widespread industrial applications in electronics and solar panels, giving it a dual driver for its value. Platinum and palladium are crucial components in catalytic converters for automobiles. By diversifying across these metals, an investor can hedge against factors specific to any single one, creating a more robust and balanced precious metals allocation that is sensitive to various trends in both the financial and industrial worlds. Ultimately, the inclusion of gold and precious metals in a wealthy individual's portfolio is a testament to a deep understanding of risk management and the cyclical nature of economies. It's an acknowledgement that no single economic system or currency is infallible. This asset class isn't about getting rich quick, it's about staying wealthy forever. By anchoring a portion of their fortune in the timeless, tangible value of precious metals, they ensure their wealth has a foundation of stability that can weather any storm, preserving their legacy for the long haul and providing peace of mind in an uncertain world. And there you have it. The 6 secret assets the wealthy use not just to grow their fortunes but to build enduring legacies that last for generations. From the tangible stability of real estate and gold, to the sophisticated growth engines of equities and private equity, and the protective fortresses of trusts and fine art, each asset plays a unique and critical role. The key takeaway is that true wealth preservation is about diversification, long-term vision, and strategic planning. It's about building a portfolio that is as resilient as it is profitable, designed to withstand the tests of time and turmoil. These principles aren't just for the ultra-rich, they can be scaled and applied to your own financial journey. We truly hope this deep dive has given you valuable insights and a new perspective on what it takes to build and protect lasting wealth. The journey to financial freedom is a marathon, not a sprint, and knowledge is the most powerful tool you have. If you found this video informative and inspiring, please help support the channel by giving it a huge thumbs up. It really helps us reach more people who, just like you, are eager to learn and improve their financial futures. Your engagement makes a massive difference and allows us to keep creating the detailed content you deserve. Don't forget to subscribe to the channel and hit that notification bell so you never miss out on our future videos. We have so much more to share with you on the topics of investing, wealth creation, and financial strategy. We also want to hear from you. Head down to the comments section below and let us know which of these assets surprised you the most, or if there's a topic you'd like us to cover in a future video. We read every single comment, and your feedback is what shapes our content and our community. Thank you once again for joining us today and for investing your valuable time in your financial education. Remember, the path to building your own fortune begins with a single, informed step. Share this video with a friend or family member who might benefit from this knowledge, and let's all grow together. We are incredibly grateful for your viewership and support. Until next time, stay curious, stay informed, and keep building your legacy. We'll see you in the next video.